What's going on, guys? I hope you are doing well this afternoon. It is 4:14 p.m. Central Standard Time where I'm at. I just wanted to update you guys on the Bitcoin chart as I see it. Okay, so I'm here on the 1 hour time frame. I'm looking at the ADX. We are still above the 30 line, which means that volatility is alive and well on the intraday levels. So pretty much, I like to look at my bands to get the true range of this area, as long as we're going to be going like sideways, for example. So I like to look at this bottom of the ribbons, if you will, and it also correlates with the 0.618 Fibonacci level, so those lines are converging, so there's confluence there. Also, there is confluence on the lower end of this band right here with the 200 exponential moving average, which is coming at 26.28K. So I would expect turbulence within those areas within the 1 hour time frame. Now, keep in mind, because we are above the 30, volatility can swing crazy. Obviously, it's more likely than not that we're just going to be going sideways for a little bit longer until we kind of just ratchet up and continue moving to the upside. That's my particular opinion. The reason why was stated in my previous videos, but if you're kind of new to watching my videos, so essentially, we had this like epic dump back here, gargantuan bear god whale candle, and pretty much got a nice little buyback. But we hit resistance. True resistance is at 26.971 and 26.798.5. So this box area, pretty much this green box and this red box are true resistances at this point. Now intraday resistances are more along the lines of the 200 exponential moving average and the green box, which is indicated by, it's kind of like a Bollinger Band, I would say, but like this tool right here. Yeah, also if you look at it from the intraday level, if you look at this right here, I'm going to take off the ADX because we already know volatility is kind of dissipating but still above the 30. So anything can happen. So if you look at the trend on the 4 hour, we're still bearish. The trend on the daily, we're still bearish. But on the weekly, which is a higher term time frame, we are still technically bullish. So the only way we break that weekly bullish trend is by breaking below the 0.618 Fibonacci level. I will close all my longs if we get a 4 hour, a 12 hour, and a daily candle close below the 618 Fibonacci level. Now, once the 618 Fibonacci level is broken, it's highly likely that the 0.382 will eventually get tagged. And given the veracity of this bear move, right, we're most likely going to wick to or a little bit below the 0.236. Now, that's a very bearish hypothetical. Okay. In my opinion, over time, I do think that will happen. I do feel like the second half of this year will be predominantly sideways and down, and we could have a capitulation event to where we go back to those lower 20K levels, and from there, that's all she wrote, frankly. Given that we did fall pretty significantly from this macro level, I'm gonna actually go to the 4 hour time frame, so you can see this pattern better, which is like this falling wedge that ultimately did break to the downside. I ultimately do think that these particular areas, we're getting a lot of accumulating resistance area right here. Okay, so it's going to be very choppy and very difficult to break this particular area. And frankly, we recently just broke it. So I wouldn't be surprised if we would eventually come back and like retest these areas, but I do expect a lower high to be printed. This particular resistance line right here is going to be very, very, very strong. Okay, this one. I'm going to turn it yellow so you know what I'm talking about. This particular line is very strong. As you can see, we had the local top, and we got multiple rejections off of this point. Multiple candles confirmed its strength, and since then we've just been going down. Ultimately, I do feel like this line will eventually break, but I do feel that because this ultimately did confirm a larger pattern trend, which was the ascending broadening wedge, I do feel that we're eventually going to come back down to these levels. So how these ascending broadening wedges work, usually they actually come back to the base of the ascending broadening wedge, which is pretty much at like 16K. But given that we do have a Fibonacci extension that is active and valid and being respected, it's more likely that we may dump, to the point 236 or to the point 382 Fibonacci level to then consolidate and then ultimately continue going sideways and then eventually breaking back to the upside. Because ultimately, I mean, if you look at the tokenomics, of Bitcoin, it's just up and to the right on a macro level. Ethereum as well, given its deflationary capabilities. XRP has a fixed supply, but ultimately, I've said this pretty much in almost all my videos, like crypto is a homogeneous market. So basically whatever Bitcoin does, the altcoins are going to follow. You obviously have like your anomalies, your exceptions to the rule. But for the most part, we're kind of looking at Bitcoin to see what else is going to happen with the altcoins. Excuse me. I'm going to drink some coffee. I'll be right back. All right. Okay, so we are kind of stuck in this range, pretty much between 25.6 and 26.97. Now, if you look at the exponential moving averages on the 4-hour, we still haven't confirmed candle closes above the 9 exponential. We've been teasing with it, so for perspective, the 9 exponential moving average is the yellow line. All right, so as you can see, we've had multiple attempts to break through it, and to me, the 9 is weakening, even on the 4-hour time frame. But if you look at the 1-hour time frame, price it's doing its best to actually like flip not only the 9 but also the 21 and the 50. So from this area, ultimately, we are experiencing higher lows. So if you look at the support resistance indicator, which is indicated by the green dotted lines right here, as you can see, buyers are coming in at 25.954K. All right, so the bulls are actually trying to solidify this area as support, which I ultimately do think is going to happen. Ultimately, we've had lows, we've had higher lows, we've had candle close higher lows to up until this point. And also, as you can see, the 200 exponential moving average is losing its intensity in slope. So as you can see, the slope is pretty intense right here. Right now we're kind of flattening, and it's kind of getting even that much more flattening. So I do feel like eventually we are going to be breaking above the 200 exponential moving average, and that is a bullish event. So I mean, keep in mind this is a scalping chart. So when you look at these like red lines or whatever, it doesn't mean like, oh, okay, we're gonna pump and then get rejected. Okay, it doesn't mean that. It just means that we're gonna pump. We may get rejected here, kind of create a higher low, eventually break it. Kind of create a higher low instance, break it. So that's kind of like how these lines I have set up here. That's the logic of why I have those particular zones pointed out, because these are scalping decisions. These aren't like hold for 2 years. If you want to hold for 2 years, I mean, you got to be patient and wait for these areas. Now, if you may even want to wait in these areas right here. Okay, some people even think we're going to 10K. All right, so if you're looking for macro, where to put my money or whatever, not financial advice, but like there's people out there that really think that we're going to 10K. There's people out there we might double bottom, at 15.5, or we could bounce here at 20K. Ultimately, I take it day by day. I take it level by level, and if you look at the daily chart, we've had bearish engulfing candles below the 200 exponential moving average. I ultimately do feel that we might eventually tap, like 27.166, maybe even go up to, 27.5, maybe at best 28K. but I do feel that this will be a rejection area to where we come up for a little bit and then we come right back down to then fulfill um, retesting these areas and actually checking if they're true support or not. I mean, I could be completely wrong. I think what will change my perspective is a break above the baseline, which is right here. If we're able to break this line at some point, I would eventually feel that much more confident that we're going to move to the upside and continue forward. But until then, it's just sideways and down, baby. So that's why I like to look at the 1 hour. The 1 hour, it's showing sideways price action. Um, I mean, you can make an argument that we just broke out of a diamond pattern. Um, so diamond patterns look like this. Hold on. Yeah, this is raw stuff. I don't really look at charts before I go live on these videos. So, yeah, you can make an argument that we got rejected here. It's a pretty rough sketch. Diamond patterns usually indicate reversal patterns. Okay, so this could be what we're working with right now. Okay, it's very crude. I could probably, come back later and do a better job, but yeah, this is kind of like what we have right now in terms of a diamond pattern. Um, Something like that, I would say. But pretty much, these usually indicate reversal patterns. So, and now they slightly lean bullish from the context of this trend. So these usually indicate trend reversals, okay? And how you measure them is by the height of it from a candle close perspective. So the candle close would be right here, candle close would be right here. Okay, so let's say we get a breakout to the upside. Okay, this is the trajectory that we could go, pretty much 27K. Now, if we break below this area, we're actually breaking support. Okay, so there's suggestions here. If we break to the downside, it's going to be devastating because we'd be breaking the 618. If we go to the upside, we would actually just be testing top side resistance, which is this red box. From there, we could come down, but ultimately, if we create a higher low, even better, gives us a shot to continue further or to open up a quick, long here, then get the rejection, open up a short, find the higher low, kind of continue upward. That's kind of like my base case thesis for scalp trading, not financial advice. These moves happen rather quickly sometimes, so I would not recommend just blindly following me. If you understand technical analysis and you know what you're doing, by all means, go for it. That's just my base case. That's my thesis right now. But if you see something else contrary, please don't be stubborn and keep a shitty position. If you see like just a bear candle break below the 618 Fibonacci level, then just get the hell out of the market, and kind of lick your wounds. Not financial advice. But anyway, all right, so I'm going to leave it at that. I feel like that was pretty fruitful of information. If you found this information valuable, please let me know in the comment section below. Please like the video if you haven't already. I'd greatly appreciate that. But yeah, take care. Have a great rest of the day. Base case is sideways. The green box and the red box area are pretty defined in terms of overall support and resistance. So let me show you, because I only have the support and resistance areas showcased in the red. So here you go. So this is my areas of support and resistance: 26.971 at most, and 25.573 at most. Keep in mind I am using the BitGet chart, so you could see differences in, like, if you're using Coinbase or Binance or whatever you're choosing, so keep that in mind as well. There's going to be subtle differences in the charts, so yeah, just for perspective. Anyway, have a great rest of the day. Bye-bye.